So are you aware of the recent collapse of Silicon Valley Bank? If not, then let me explain the situation to you. Now, the collapse of Silicon Valley Bank is not a result of fraud or scandal, but it's due to mismanagement and sheer stupidity. Now, if you are a stock market investor, you must pay attention to the implications of this collapse on bank stocks. In this video, I'm going to explore the reasons behind the collapse of Silicon Valley Bank, analyze the role of risk management, and discuss its further impact on the wider economy and bank stocks. So let's begin by understanding the reasons behind the collapse of Silicon Valley Bank. Now, Silicon Valley Bank had been buying a lot of treasury bonds and other debt instruments, including MBSs. Now, however, the bank did not hedge itself against the rise in interest rates, which is a basic measure of risk management. Now, the Federal Reserve had been raising interest rates very aggressively to fight inflation, which led to the falling in bond prices. Now, as a result, Silicon Valley Bank had to sell some of its bonds at a big loss to make sure that it had enough money on hand. Now, the bank's customers were startup tech companies that were not profitable and burned through money very quickly. Now, these companies, they needed cash, and Silicon Valley Bank had to sell its bonds to provide them with the required funds. Now, this led to the classic bank run as customers panicked and rushed in to get their money out of the bank. Now, the bank had to sell more of its bonds for a bigger loss or to raise money, but by that time, it was too late. The customers had lost confidence in the bank, and it was game over for everybody. Now, let's analyze the role of risk management in this collapse. Now, risk management is a crucial aspect of banking. Now, it involves identifying, assessing, and prioritizing risk, followed by coordinated and economical application of resources to minimize, monitor, and control the probability and the impact of unfortunate events. Now, Silicon Valley Bank failed miserably at risk management. It did not hedge itself against interest rates rising, which is a basic measure of risk management. Now, the bank also failed to assess the risk of lending money to startup tech companies that were not profitable and burned through money very quickly. Now, these companies were the bank's customers, and when they needed cash, the bank had to sell those bonds, like I said before, leading to the classic bank run. Now, Silicon Valley Bank's failure in risk management highlights the importance of risk management in the banking industry. Now, banks must adopt effective risk management practices to avoid these types of collapses. So finally, let's discuss the impact of this collapse on a wider economic and on bank stocks as a whole. Now, collapse of Silicon Valley Bank had significant implications on this wider economy, like I said. Now, the bank's customers were those startups that were less profitable, all right? Companies could have gone bankrupt, and a lot of private equity firms that had a huge ownership interest in these tech companies would have lost a lot of money. So the collapse of Silicon Valley Bank would have had a domino effect on other banks, leading to a systemic risk to the whole banking sector. Now, to avoid such a scenario, the government, as always, intervened and set up a new borrowing facility called the Bank Term Funding Program, or BTFP, which allowed banks to pledge their U.S. treasuries as collateral for loans from the Federal Reserve. Now, this bailout was necessary to prevent a systemic collapse of the whole banking sector, but it raises questions about the fairness of the system. Now, the bailout was eventually for a group of privileged people who make political donations. Now, the rules of the Federal Deposit Insurance Corporation, or FDIC, state that the FDIC protection is limited to $250,000. However, many tech companies had billions of dollars in Silicon Valley Bank. So the government held an emergency meeting, and they changed the rules to save these private equity firms from a huge loss. All right, so we will have to wait and see what the long-term effects of all this is going to be on the economy. So take a moment. Hit the subscribe button. Let you and I stay connected. Thank you so much for stopping by here today. My name is Rock Daniels. I am the Bluegrass Realtor for all your real estate needs in Central Kentucky. I look forward to seeing you again soon.